Hello, everyone. This is Dr. Duru from Ahan Analytics with the market breadth. And let us take a look at what happened in the market today, April 30th. I'm recording this after the market closed. So I'm calling today a hiccup day. The big news is right here in screaming headlines on Yahoo Finance. The first estimate for GDP for Q1 showed a small contraction. There's debate going back and forth that whether or not this indicates a recession. It, of course, does not represent a recession. It's too small, and it doesn't represent broad-based weakness in the economy. The biggest effect for GDP was a huge surge in imports as companies, consumers, or whatever rushed to get ahead of punishing tariffs from the administration. Now, I'm calling today a hiccup day because this news should not have been a surprise, but the market acted surprised in the morning. I think maybe, and you'll see when I go through the technicals, I think people were just, certain traders were just looking for an excuse to sell, and this big headline was their excuse. And it's a hiccup because, as you'll see, the market proceeded to buy off of the lows and close strong. So, since I'm showing this, recording this after market, just want to show you some quick important headlines that are going to dominate trading tomorrow. Microsoft soared after hours. Well, I shouldn't say soared until I know what the actual percent increase is, but it looks like it went up after hours on beating earnings. Meta also went up. And in sympathy, Nvidia popped. I think I saw that one at 3 to 4% after market. So we're looking at a very strong open for May 1st and a very strong beginning to the month of May. Okay, so let's take a look at the indices, starting with market breadth. And let me go to regular scaling so it's easier to see. My favorite technical indicator, AT50, also called above the 50-day moving average. And you can see this is about as strong a post-oversold period as we can get. So this is the day, April 22nd, that the oversold period ended. And my favorite technical indicator has basically been up every single day since then. Today was a close call, of course, because the hiccup took market breadth down back to where it was last Friday, at last Friday's close, but then the buyers just took it straight up from there. And the end result is what I'm calling this little hiccup here. And now it looks like we're ready to resume this strength in the rebound from the oversold period. And like I said, the strong earnings results from big cap tech are promising to send this higher. Um, Also note that market breadth's downtrend is over. No more patterns of no more lower lows and lower highs. So that's very bullish for the buyers. However, the longer term indicator of market breadth, AT200 or the above the 200-day moving average, is still kind of just churning along. It is still up, going up from the lows, but it's churning along and it's still in a downtrend. Okay, so that's something just to keep in mind as we move along here. Okay, let's jump into the indices and you can see more clearly why I'm saying this is a hiccup. Um, so here's the hiccup. We gapped down. We erased all of the gains from yesterday. Sellers took the S&P 500 even lower. I think it was down as much as 2% on the day. And then something flipped. The switch just flipped and the buyers took us into the close. Perhaps people were anticipating the strong results. Now, why did I say that maybe people were looking for an excuse to sell? Well, this is the first important test coming up for the index. The S&P 500 is this downtrending 50-day moving average line, which is this red line. And I'm assuming that on those strong Meta and Microsoft results and Nvidia going up, we're going to get a gap up either right into that line or above it. And that if we get above it, that's even more important because that sets us up for the even more important test of 200-day moving average resistance. I'll just point out really quickly again that the S&P 500 is above two other important pieces of resistance, which was this day when it gained big time on the news that reciprocal tariffs are going to be paused, and then it's also above this low here from March, which marked this what I call this bear market first area of agitation. So it's clearing some important hurdles after breaking above this 20-day moving average, which is this dotted line. Okay, so everything is set up bullishly, but let's see how it handles this important line of resistance here. Um, and so the way I'm positioned right now, or the way I'm thinking about it is if the S&P 500 gaps up, I'm not going to get any more bullish than I am because of how close this test to the 200-day moving average is. And if it comes back below the 50-day moving average, I'm going to have to get a little bit more cautious, actually a lot more cautious. I might even buy some put options as a hedge on some positions. Okay, let's jump to the NASDAQ, which will probably be even more impacted by Microsoft and Meta. You can see that the NASDAQ also stopped just short of flat on the day, so small marginal negative. But still, the hiccup is clear, right? Gap down, sold down a little bit more, and then buyers took us into the close. It is also even closer to this important downtrending 50-day moving average line. Okay. Now, there is a little bit more space than the S&P 500 had from the 50-day moving average to the 200-day moving average. So I might actually get if the Nasdaq closes above here, I might actually dare to try to make a short-term trade from here to there. But we'll see. So that's what I'm thinking. Also, just note that the history that the Nasdaq has left well behind. It was in a conventional bear market for a very short time. Okay, now I'm back in business with IWM, which is the ETF of small caps, or otherwise known as the iShares Russell 2000 ETF. It's right here teasing its bear market line. I kind of got drawn in. This was a confirmed breakout above that line because it was a second higher close above there. So I went ahead and bought a call option. I tried to add to my position when it came down here on this hiccup, but my order never closed during the day. So I'll be looking to see whether I can add it before IWM proceeds to test its 50-day moving average. I'm sensing that eventually I'm going to be writing a post about a synchronous test of 50-day moving average resistance for the major indices here. So this is going to be interesting development for the first week of May. And note that I like IWM even more than the S&P 500 and NASDAQ because its gap or a room to run between the 50-day moving average and 200-day moving average is particularly large. Okay, the VIX is also showing us bullish signs. You can see here its downtrend continues. The hiccup in the market caused it to soar higher back to levels last seen at the highs of last week, and then the faders came right in. So if I zoom in here, you can clearly see this downtrend remains intact based on that fade and close. Okay, so it was a hiccup day, but things are setting up pretty bullishly. Things still look bullish. Again, let's look at how the major indices deal with resistance. Now, I have a bunch of charts I want to go through really quickly with you. And of course, things could change a lot if we're going to open up higher tomorrow with a gap up. So here I was in AVGO or Broadcom Incorporated. When it broke down below the 200-day moving average, I got out quickly, and now it's above converged resistance at the 200-day moving average and the 50-day moving average. So the stock is once again bullish. But with earnings coming up, I'm not going to dare to get in. I'm just going to keep an eye on this. But notice that this is bullish, and it has a lot of room to run up to the upside. So I really wish earnings weren't here. Otherwise, I would be a definite buyer of Broadcom here. Okay, Spotify. Spotify is interesting because it gapped down post earnings. It lost 3.5% on the day. And then today it came roaring back with a 6.4% gain. Have no idea why people suddenly changed their minds, from day to day. But clearly now the net move on Spotify is positive. It looks set to continue its run up and resume its old trend higher. OKTA is a stock I said had been thrown out with the tariff baby water. And that is indeed what has happened. It's been rallying right back alongside with the market's rebound. Yesterday, we got news that it was being added to one of the indices, I think a mid-cap index, and it soared 7.4%. So good move there. Now, Okta just needs to break this resistance, and it should continue higher from there. Resistance meaning the last peak. This is an interesting one. Brinker International, and let me scan back just to see how strong this restaurant group has been. It's been very odd to see this given most stocks that I see in this sector have been performing really poorly. But somehow Brinker's been hanging in there. They are the owners of Olive Garden and I think Macaroni Grill. But they finally had a bad earnings result or bad response to an earnings result, which came in at a whopping 14.8% loss. That kind of a pullback pretty much signals that the this uptrend is truly over for now for Brinker. So I would be very careful with this one. I don't want to short it, but I certainly don't want to go long, at least not until it's completely healed all of its post-earnings loss. But my expectation is that over time it's going to test the 200-day moving average before it ever heals. But that's just a guess. And always remember that I present this information for informational purposes or educational purposes. Please do your own research and trade and invest according to your own risk tolerances and time horizons. Palantir has been an amazing stock. Again, we're going to see a lot of stocks that have just followed the market higher. Palantir had a better starting point because it already had a 50-day moving average breakout. And you can see here it is almost back to all-time high. So I have a position here with a calendar call straddle. Oh, sorry, calendar call. Say that 100 times. Where I'm hoping that I can start next week with just a long call option going into earnings. I think this is going to rally all the way into earnings as a strong stock. Okay, Snowflake database company. It broke out above the 50-day moving average last week. So I've been this week, and I've been watching it very closely. I'm not yet bought into it, but if it can clear this point here, which is around 160.41, I am a buyer, and I'm anticipating that it could go as high as challenging its previous highs at this level, which is like around 192, 193. Okay, so importantly, it's cleared both the 200-day moving average and the 50-day moving average as hurdles. Okay, this is interesting. Logitech apparently did not benefit from all the buying of computer equipment that was in the GDP report. Apparently, businesses just loaded up on computer equipment again, trying to front run the impact of tariffs on electronics. But Logitech clearly didn't benefit. It even gapped down post earnings today, 3.6%. And moreover, it's still well below these important resistance levels from the converging 50-day and 200-day moving average resistance. So I'm keeping an eye on Logitech, but it is not interesting here for me to buy given this post earnings a loss. But I think at some point it's got to fill this post tariff gap if the momentum in the market continues higher. Okay, First Solar, I just continue to keep an eye on it because it's going to at one point be one of my favorite contrarian plays in the next few years, but it is not showing signs of quite bottoming yet. Today on earnings, it dropped 8%, 8.3%. So this just confirms the overall weakness. If I pull back here, you can see that First Solar broke down below important support that was set way back in November 2023. And so now it's probably working on reversing a lot of its gains from the lows of 2022. So I'm very cautious on First Solar, even as I'm looking for that point to make it my big contrarian play. But at least I have about one new buy point, which is to get above 144 here, which would mark, complete healing from the post earnings loss and then a fresh breakout. All right, T-Doc. So this one has been on a roller coaster. It looked like Teladoc, this is a telehealth software company, looked like it was making a breakout here, then it fell back, then it looked like a more convincing breakout. And I missed this move and I thought that, I was going to miss a big one. And instead, TDOC came right back to earth with a big 13.6% post earnings loss, and it hasn't been the same since. Earnings are coming up again, but this stock is near all-time lows. And if I pull back here, you can see why this is such a dangerous stock to buy into. And when you see a stock down this low near its all-time highs and it's making all these false breakouts, it's like red flag zone all over the place. So this is Teladoc is a definite no touch for me. But it's also not a short because at any time it could do one of these bizarre breakouts of double-digit percentages, and your short position will be big pain. So Snap was a play. I don't have my note in here, but I had noted that they got a board member from Yahoo, and I thought that that might be a precursor to some sort of deal making. That's a longer term view, but in the meantime, Snap has started to weaken, and it also fell big, 12% post earnings. I think the biggest problem people had is that they withdrew their guidance on revenue and earnings, I believe. But I think of this as a buying opportunity, particularly if it can hold the lows from all the tariff drama in April. I'm going to dare to buy one more tranche of stock here, even though it's in a bearish position, having failed at the 50-day moving average resistance, and also this 200-day moving average is moving down. Let me zoom in here and just show one kind of trading school lesson here, which is notice how Snap had just barely broken out above the 50-day moving average ahead of earnings. Now, if you're only looking at technicals, you might think this is bullish, a bullish sign for earnings, but that's very dangerous to make that assumption, particularly when the overall trend looks pretty bad and choppy for Snap, right? So we don't want to overdo the technicals here ahead of big events because the market likes to fool us, likes to fool people all the time. Okay, Caterpillar. This was an interesting one. It also had a hiccup. It actually gapped up and then it sold down for about a 1.5% and then came back and recovered for 0.6%. So this maker of heavy industrial equipment is like what I like to say is a key tell on bullishness. So I like to sometimes buy put options as a hedge on my bullishness, which I am right now, short-term bullish, even though I'm longer term, I guess intermediate term bearish until the 200-day moving averages are broken. But anyway, until then, Caterpillar looks like it could be a good play, could be positioning for me to buy some put options as a hedge. I just need to see it test this 50-day moving average. And then I'll go ahead and move in and note that it has almost reversed all of its tariff drama losses. Okay, we're running down towards the end. Cocoa, the Vita Cocoa Company, ticker symbol COCO. They're the makers of, I think, some sort of coconut water. They've had a choppy time, but they're hanging in there. They also hung in there during all the tariff drama. Today had good earnings, 4.8% pop, and it got above the 50-day and 200-day moving averages. I just need to see a higher close from here, and I am a buyer of cocoa. All right, next up, Freshworks. AI company. I listened to some of their conference call. I scanned their earnings conference, and I'm really impressed with their results. I They had a really yo-yo day. They were up much higher in both post aftermarket and pre-market trading, but then open right at the 50-day moving average. This is where the technicals really drew the stock in. Sellers, for some reason, stepped in, took the stock all the way down, and then it popped right back up, right back to the 50-day moving average for a net 3% gain on the day. I bought call options and shares right as it was approaching the 200-day moving average. And this is one where I'm combining both the fundamentals and the technicals. I think their results are really strong. And if the market can hang in there, I think Freshworks can be carried past the 50-day moving average and at least test this previous high from March. So that's my guess and that's my play. Let's look at oil. Oil had a really rough day today. USO was down 3.5%. It's actually just about to test its lows from the tariff drama. So oil's looking really bad. Let's scan back to see how bad USO could get. If it breaks down below there, look at all of this empty space. It could get down as low as 58. And then if it doesn't hold this low from 2023, it has a far way it could drop. Okay, so that's it for the individual charts. So again, I'm calling this a hiccup day. Let's pull up the S&P 500 for a quick review. Hiccup day because the market gapped down on headline bad news that should have been well anticipated, but it wasn't. And for some reason, people finally realized that the news was old, and that it doesn't say much about what's to come. Now, ironically, what's to come is probably worse economic news, but I think for now the market is focused on two things. One, that these weaker economic signals are going to force the Fed to drop rates, even though inflationary pressures are coming with tariffs. And then two, um, we have to remember that this tariff pause on reciprocal tariffs is only 90 days long, and anything can happen in between. So keep an eye on the bond market because it seems like that's the one signal that the administration is paying attention to in terms of cooling their heels on getting super aggressive with this tariff policy. All right. Well, thanks for checking this out. And as always, you can also get more written details at drduru.com/122, which is where I blog. Take care and see you the next time.